Good morning, YouTubers. So we'll have a quick look at the week's portfolio. So just a roundup of the whole portfolio today. So let's jump on in, straight in with it. So here we are, 1.75% increase, which is brilliant news as it's been in the red for quite some time now. Obviously, it's been a bit of a rally this week. So we'll jump on over and start analysing why this is and the various other aspects of the portfolio. But before we do that, please don't forget to hit the like button. It's a tiny little thumb down at the bottom there. If you could just little tap it and then that goes blue, and then that knows YouTube that you watched the video and that you liked it. And then what it will do is then pump it out to other audiences who might be interested in watching this video, and that will help the channel grow, and then the videos get better quality, more interaction, and obviously if you can comment below, subscribe, all the rest of the interactive things that YouTube like, that would be brilliant. And before we begin, just a reminder, I'm not an FCA registered advisor, so I am literally just a guy on YouTube giving you a sort of overview of his own portfolio, none of which should be taken as advice. If you need advice before investing in the stock market, please do contact a professional and seek your own independent legal advice before investing. So with that said, if you do want to start on the journey, please use any of the links in the description below and you will get a free share from Freetrade or Trading 212, valued up to £200 with one of them and £100 with the other. There is a bit of a queue at the moment for some of the providers, because they've just been inundated with new applications. So do bear with them, but you will get your free share when they get round to opening your account. So let's jump on in. So this week, the main sort of gains really are actually some of these red items. So Apple, for instance, has been around about 7 to 8% down for me. So now it's over at 3%. Obviously, that has eroded some of the losses that particular stock has got. So again, we got Churchill Capital is only down 10%. That's been down as low as 20. IP Morgan iShares, JP Morgan even, that's down only 3% now. That was down before. Netflix got to around about 8% down. That's pretty much flat now. PayPal and Nvidia, both of those are down a little bit. Sorry for the cough there. I was still not feeling 120% yet, so that's even a thing. Square here, we're back down to 5% loss on that. Again, that even got to about 15% during the week, I believe. Tesla, we're at 4%. That was travelling around about 10. Vanguard UK Gilt, 3%, and Walmart 3%. So that is one of the reasons why it's gone up, because some of those tech stocks and the rest of it have actually recovered slightly this week. But obviously, I've also got a mixture of growth stocks and stable ones. So AGNC up 4.3%. Bearing in mind that I recently actually put some funds into them. So obviously, they were at a slightly higher price, which actually dollar cost averages up. So obviously, if you buy it cheap and then you buy it again, a second round of funding, and you decide to buy at a higher price, that obviously dollar cost average is up rather than down. And then I did put some further funds into Apple, and then obviously you've got various other stocks here. So AT&T is up 4%, Automatic Data Processing up 8%, Bank of Montreal up 10%. Cardinal Health, that's been down for quite some time, and so is Caterpillar. Both of those are 9 and 12%. Chevron's up 10% or 9% even. Ford Motors, that was a free share that I got, but it has still returned me 20% on it. Obviously, benefit of hindsight, would have bought loads of them if I'd have known, but it's not a company that I particularly believe in. Again, General Electric here, up 21%. Again, 2 free shares for where people are clicking on the link and signing up. Obviously, they would have got the same share as well, so they would have benefited from the same 20%. That is assuming, of course, you didn't sell your share. If you'd have sold your share, then you wouldn't have benefited from that, but you do benefit from the free money that it's given you, and you might have invested in something that had given you back even more. Lowe's Company, LTC Properties. You see even McDonald's is up. Nucor here up a whopping 30%. And you'll see as a general sort of theme of relative stability now. The actual pie itself, I did a midweek review on that. That's currently up 5.28%. So, a reasonably healthy portfolio. Obviously, we've still got some losses, but I think of a portfolio of this size, bearing in mind 50 of these stocks are part of the pie, and I'd already invested in some of those companies like A, G and C when I started the pie. But if you take that into consideration, it's quite a lot of stocks to only have a handful of reds, so that's not too bad. If we nip on over to have a look at NEO, which is in the investing part of it, obviously that's still down considerably, 19%, but that was actually, I think it got to about 32% down at one point, so it's gone on a bit of a rally this week. Obviously it got down to the lows here of 36, and back here I think it even got down to about a 35 or something. Over a 3-month period, obviously it's quite down, but over a week period here, we've gone from, I think it was about 35 here last Friday up to 39. So it's bounced back a fraction, which I would expect to see, because all tech stocks and NEO, although they're an EV manufacturer, cars, they are essentially a tech stock, a bit like Tesla, because the future of vehicles is much more orientated around technology, infotainment systems, all that kind of stuff. So anyway, so that's the overview here. Obviously, just as a reminder, the markets were closed yesterday, all pretty much across the world. I think they're open on Monday, and correct me if I'm wrong in the comments down below, but Monday would be the last time for you to add any money to your portfolio before the tax year ends. So don't forget, these are ISAs, the gains, so the profit you make is tax free. So if you turn your £10 investment into £20, you don't pay tax on the £10. Obviously, if you keep it in the invest part of the app, then you do pay tax on that, but obviously there are different shares in both bits respectively. So don't forget to use any of your limit up if you can indeed do that. Obviously, don't put more money in than you can afford to do, as per the disclaimer at the beginning. Don't take my advice, seek your own advice and so on, but just a heads up. But obviously anybody that's maxed out their ISA allowance, which is obviously capped at £20,000 per annum, it's just about a refresh, so maybe you can start reinvesting in the market. Anyway, just thought that was a nice brief update for you all. I hope you have a lovely Easter weekend. Please stay safe, don't flout the rules, and let's get back on track with our lives and things, and enjoy the good weather, and I shall see you next time.